the stock market is down. Maybe you've seen the news recently. There's a lot of reports saying that stocks are declining, and maybe you're in that situation where you already own stocks and all of a sudden they're declining. And that's what we're going to talk about today. What we're actually going to talk about is if you own one of the great Warren Buffett stocks, you bought it at a wonderful price, and now the stock has fallen even further. What are you going to do in that situation? And you're listening to Investing Mastermind Podcast. My name is Signe and
And I'm Michelle Markey.
So what we're going to talk about today is that situation where you have done your homework, you've been listening to the podcast and you've been doing the homework on your own. You've studied a business, you found out this is a wonderful business. Maybe it's a business you heard us talk about and you went back and did your own studying and found out, okay, a great price for this stock, the margin of safety price that we talked about for this stock is, let's say, at $100, and you went in and you bought it $100. And then what happened shortly after is that the stock price fell even further. So there was a new decline. And now maybe the stock price is $50. And you're thinking, what is wrong with this strategy? And the first thing to say about that is the margin of safety price is not the bottom price of a stock. It's not like swing trading, and the swing traders try to buy a stock at the low point and sell it high. That's not what we're trying to do. We're trying to figure out what would be a reasonable price for this business when we calculate what's this business worth. We're then, okay, what would be a reasonable price? So the price you bought it at, was that reasonable price? Can the stock fall even further? Yeah, because it really depends on emotions in the stock market.
Yeah. And unfortunately, sometimes that's just the reality of volatility in the markets. Like, no matter how well you did in your own research and you thought this was a reasonable valuation that I attributed to the company based on their historical performance of generally how they produce earnings, the rate of that, and how they do in some of the other metrics like return on invested capital. Like, based on a lot of metrics, you would think, okay, this was a fair price to pay. But as you know, the investing markets aren't always rational, and people have different reasons why they pull out their money. So other people may have been invested in the same company for different reasons than you, and they need to sell for other reasons. Like, maybe they have some loans that they need to pay off and they just need to quickly sell, get out of this company's stock, and then pay off their loans. Or they're just afraid in general because of what's going on in terms of conflicts in the world. And when they're afraid, they cash out of markets and then they hide their money under their bed. That could be what's going on with other people. So just because you bought at a good price doesn't mean that you made a mistake. Other people just have different reasons why they're selling now, but we could look at this as actually a positive opportunity if you still have conviction about the stock. Because then, if you see this going more on sale, even lower than your margin of safety price that you paid, technically what you should do is buy more. Like, in a simple other example, recently at the grocery store, I bought some cabbage for 69 cents a pound. And I thought, that's an okay price, 69 cents a pound. But now that there's a certain kind of cultural holiday around this time in mid-March, also known as St. Patrick's Day, it has made the price of cabbage go on sale at 19 cents a pound. So guess what? I didn't get angry or upset that, oh man, I paid too much. I paid 69 cents a pound. No, I got happy because now I can buy more cabbage for 19 cents a pound. So you can see that that's how we should think about our margin of safety. Like, one price was already good, but now it's an even better price. So we should stock up and buy more.
Yeah, and this applies to where we're following Warren Buffett's strategy. We're, doing all the principles, ensuring that this is actually a wonderful business. If it's a bad business, if it's like a junk business that's like really not performing well, do not buy more. I see that all the time. Oh, people don't know that there's a reason why it's on sale. They don't make money. So make sure you do the first part of the homework. And that's also something that can give you more conviction that it is a wonderful business, is to keep following. We talked about ROE and ROIC in a previous episode. So you can keep tracking that that can then reinforce, well, this is still a wonderful business. As Warren Buffett style investors, so he was taught part of the strategy that he's using today. It comes from Benjamin Graham, and Benjamin Graham used to talk about Mr. Market. So he called the stock market Mr. Market. And what he talked about, Benjamin Graham, was that sometimes the stock market is up and Mr. Market is happy, and other times the stock market is down and Mr. Market is sad. It's an irrational person, and it's kind of the same thing. So you go to a hot dog stand, and one day the hot dog is maybe costing you $20, and you're like, oof, that's kind of pricey today. So you're buying the hot dog, but then the next day it's only $5, and that's the stock market for you. Most of the big institutional investors, what's called whales out there, they are investing quarter by quarter. So if there's a business that comes out and say, hey, we don't think that the business is going to grow the next quarter, then these institutional managers, they sell their stocks, and that's when you see the big declines. So there was a business that came out and said, we're still going to grow, but we're not going to grow like we did last year, and we don't believe that we're going to grow the same. What happened to the stock price? It fell 15% because the management was honest and saying, we don't think we're going to grow as much because consumers don't spend a whole lot of money right now. We're still going to grow, but we're just going to not set expectations too high. And immediately, Mr. Market, is it still a wonderful business? Yes, it is still. They're still making money. They're still investing those money in growth initiatives and being very clever with growing the business and opening up multiple markets to also sell their products there. So sometimes those institutions, they need to perform well all the time, because if they don't perform well, they have angry clients calling them. So yeah.
You can see that just because a stock is going down, maybe due to institutional investors pulling out for various reasons, like there could be some people who are panicking and want to withdraw their money from the fund. So a fund has to sell stocks in order to give money back to some of their investors. And there could just be different reasons why they need to take out the money that we're not privy to. It could be because they think the company's not going to do well in the future, or people are so afraid of world events that they're demanding their money. Like there could be all kinds of reasons, but that doesn't take away from the fundamentals of a business, like Signe was just saying. So in that sense, you should keep your sense of faith in this company if you've done your homework and you believe in it and you think that it will recover and do better in the future. And even if the stock market is not rewarding it today, like they're selling it for way less than what it should be worth, that just is a better buying opportunity for you. And you shouldn't second guess yourself. If you find yourself second guessing yourself, then that happens. I've made that mistake too. Like I had owned a lot of Google before, and I sold a bunch of it because I let myself become afraid because of what people were saying AI was going to do to Google, and it was going to destroy search. And there was all this fear around that it somehow got to me, and I sold. But I should have kept investing in Google when it kept going down instead of getting afraid. So that was one of my learning lessons, that I should try to not do that, because I had done the work and then somehow I got some other idea in my head. And that's where we tend to make the mistakes, is when we let fear get to us.
Yeah, exactly. And so what would I do in that situation, right? So I am actually in a situation right now where I invested in a business that I still believe in it. I still think it's wonderful. And what happened was I invested in this stock, and after I invested, the stock price declined and it kept declining. So the first thing you want to do, you want to understand the crisis. You want to understand what is going on in this business and how long do you think that this crisis is going to last? I mean, we can't predict the future, but sometimes it's like, okay, this is going to be a pretty quick crisis and it's going to go well. Maybe it's something people have forgotten within a few months. Maybe it's something with this business that they need to get control over. So you want to make sure that you understand what is going on. The next thing you want to do is you want to just keep an eye on some of the data in the business. We usually only use annual data when we look at businesses, and it's simply because a business can have a bad quarter. Like, for example, certain industries relies a lot on what they sell at Christmas time. If it's something you would typically give as a gift, Christmas would be the time where they sell a lot of things, but the other quarters might be slow. And that's why we don't want to look at quarterly reports, because they don't give that good overview of what the business does. But you can listen to what is management saying quarter after quarter. So every quarter they come out with a quarterly report, and they're usually also commenting on it, and you can read the annual report. So you want to follow what is going on. And then, just as Michelle says, it's a great opportunity to buy more. So if there's nothing in the fundamentals that changed, if it's just the world has changed, but the fundamentals is in the business is still great, then I know it can be difficult, especially like from my perspective. This has been going on for almost a year now. I understand what is going on, and I continue to keep myself updated, because what happened was that one thing happened, and then the next thing happened, and then the next thing happened. And we see that sometimes that bad announcement doesn't come alone. There's always something that follows up. So this is something that first had to do with tariffs, and then some other things happened within this business. So just follow along and understand what is going on. It's an opportunity to buy more when the business is still wonderful. So sometimes the world can change, but the business is still well performing. So that's what I'm doing. But I also, for a year, like sometimes I must admit, I was like, okay, is this still wonderful? So I go back to my case and I study and I learn, and then I'm like, oh yeah, I can. The data doesn't lie. I can see it's still good. Okay, I still believe in it.
Yeah. And even if you're down already a lot on it currently, I wouldn't sweat it, because if you can still sleep well at night, regardless of how down your investment is, then you probably haven't made a mistake. So that's another test you can put yourself through, is can you still sleep at night well enough, even though it's down and it's way in the red and you're like, gosh, did I make a bad mistake? But as long as you can pass the sleep test, it'll probably be all right.
Yeah, that does it doesn't keep me up at night for sure. It's but that's a good. Yeah, I think that's a good one, because of course, could be other things that are keeping me up. So I definitely can see the difference between being awake and thinking about it. But no, I do not do that, because I have such big conviction in my case, and that is going to go well as soon as they're over this crisis. It's going to increase in price again. So cool. Do you have anything to add to this situation where people might be owning a stock and it has declined? Maybe it's a wonderful business, maybe it's not. If it's not a wonderful business, don't keep buying. If it is a wonderful business, you can keep buying. Anything else to say to people?
I mean, if you bought your stocks recently and they're in the red, don't be so quick to make a judgment about it. I'd say give it some time. If you still believe in it and you're sure you didn't make a mistake, then I think sometimes you have to try to zoom out a little bit and look at the next few years ahead. Like, imagine, where will this company be in 5 or 10 years? And if you think it will be in a better place, then hold on to it. If you think it's like destined for the downhill and it will never be the same and never recover, then that might be the case for potentially building towards selling it. But you should also follow a certain set of rules when you're about to sell a stock, not just get afraid and then sell just on a whim. So, yep.
Yeah, that's a super important point, to have those steps. Don't panic sell. Like, do not do that. One of the things that I believe also, I think it was Guy Spear who maybe mentioned that he would place orders on the weekend, like a limit order, because then he wasn't like in a certain emotional state when he did things. So it's a good idea to do it when the market is closed, if you're considering anything, and don't do anything irrational. Like, make it based on a reason why you're selling. There's some reason for it.
But even if you think you have a rational reason now, in hindsight, if you made a mistake and you shouldn't have sold it, then you'll be like, oh, that was irrational. But sometimes that happens. Like, we
Yeah.
think we're being rational in the moment, but we're really being emotional. But it happens. Like, we just try to learn from the mistake.
Yeah. Yeah. We talked about some of those mistakes a while ago, Michelle, where it's like, some mistakes are more painful than others. And some of the things that can be painful is maybe selling too soon,
Yeah.
right? Where you sell something and it was too soon. That's painful.
Exactly. So, yeah, but hopefully this gives some food for thought. And like, I know it can be painful in the moment, and every time you open your portfolio, it looks less good than before and it's more red, but you just have to keep holding on if it's a winner.
Yeah, 100%. Yeah. Seen it so many times how sometimes Mr. Market, he forgets about something in a day and you should have jumped in and maybe you missed it because it was only one day that the stock was down. Sometimes it's a year and a half. So it's Mr. Market can incorrectly price a stock incorrectly for quite some time. So, all right. Well, with this, we are ending this episode. We hope that you found some motivation in this and is going to do a little bit more research instead of just not sleeping at night and trying to find out, is it as bad as you think it is? So we will be back in 2 weeks from now.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.